Welcome to CPA Australia's webinar, STP Phase 2, What It Means for You. My name is Eleanor Cassipides and I'm the Senior Manager of Tax Policy at CPA Australia. We have people joining us from all over the country for today's webinar on STP Phase 2. In today's webinar, we will be covering the journey so far, the STP expansion, what is and isn't changing, and the ATO's transition approach. Before we commence, I would like to take a moment to acknowledge the traditional owners from around Australia and pay my respects to elders past, present and emerging. I extend this acknowledgement to all Aboriginal and Torres Strait Islander people who may be joining us today. Today it is our pleasure to have Chantal Wayman join us to talk about the latest on guidance, support, deferrals and the ATO approach on Single Tax Payroll STP Phase 2. Chantal Wayman is the Single Tax Payroll Employer and Intermediary Engagement Director at the ATO. She has 15 years experience in tax administration, working in operational teams and on priority projects, with a number of years focusing on initiatives at the forefront of the ATO's digital strategies and initiatives. Chantal has spent 6 years with the STP program, working in design and policy, and is now focused on supporting employers and their intermediaries to transition to STP Phase 2 reporting. Today we will be taking questions through our Slido Q&A panel. Please submit your questions throughout the webinar and we'll address them at the end of Chantal's presentation. For any troubleshooting queries, please send a message to the host Annabella Liu using the chat box. Now, let's get started. Over to you, Chantal.
Thanks very much, Eleanor, and welcome everyone. Thanks for joining us today and for that lovely introduction. Before we talk about STP Phase 2, I'd just like to take the opportunity really to do a bit of a recap on how far we've come. So if you have a look at this next slide, no doubt you'll all be aware that there was a phased transition approach to STP with substantial employers, those with 20 or more employees, starting first back in July of 18. And then small employers followed them from July 2019. Now, of course, this means many of you that are here today have been using or reporting through STP for, perhaps 3 years. So during that time, we've had sort of 300 STP software solutions come to the market. We've got nearly 800,000 employers who have started STP reporting, including some 200,000 small businesses that have actually started using software for the first time, which is really great. And we have, employment information now being reported through STP for, I think, around 13 million employees. So really, Phase 2, if we jump to the next slide, is just the next step in the STP journey. So we already have, I think, 2,000 employers reporting in the STP Phase 2 format for about 20,000 employees, which is a really great start and a great opportunity for us to make sure all of our systems are working, and we call this a bit of an early adoption phase. But what we're going to talk about now and why we've all come together today to talk about is STP 2. So you might know that in 2019 in the federal budget, it was announced that we would expand the data that is collected through the STP report. At a really high level, employers will still continue to report employment information to the ATO every payday through STP, but what's different is that we will now share this information with Services Australia through updated technology in near real time. So it is important to mention here that sharing of data across government or between government agencies isn't new. But these changes really are just another step towards improving and streamlining services for our citizens, particularly those employees that are Services Australia customers. We've also made some changes to the STP report as well, just to future-proof it so that if there were any sort of changes to government policy, we can easily accommodate those. And the one important thing to remember is that whilst the STP Phase 2 is mandatory from 1 January 2022, we'll talk a little bit about our transition approach a little bit later. I just want to talk around why we're making some of the changes to the STP report on the next slide. So really what we've done is introduced Phase 2 to support the administration of the social security system. And so through that updated technology that I mentioned before, we'll share the data in near real time with Services Australia, and it really aims to reduce the reporting burden for employers who need to report employment information to multiple government agencies. It'll enhance interactions associated to responding to earning clarifications from government about your employees. For your employees that are also customers of Services Australia, there'll be reduced need for them to provide things like pay slips and income reporting, particularly for those people who have to report to Services Australia on a fortnightly basis. There's some changes being introduced that will reduce the need for separation certificates when employees leave as well. And so we'll talk a little bit more about what the changes are and how they actually achieve some of this reduction in burden. But essentially, many employees need to confirm income information on a fortnightly basis with agencies like Centrelink. So we're really trying to reduce some of that paper-based and quite onerous reporting that people have to do across government multiple times, the same kind of information. And, ultimately, we're moving towards being able to enhance family tax benefit processes and reducing how often Services Australia and agencies like Centrelink need to actually contact customers and employers. So I think, Eleanor, we're going to have a really quick poll now. If you just want to introduce that before we get started.
Thank you so much, Chantal. We actually have 3 poll questions scattered throughout the presentation today, and what you can do is select your choice through the WebEx application. So the question is, I am aware of what will be different as a result of the STP Phase 2 changes. And so we've got a few agrees, a few neutrals. So there's a real smattering of results, which is a really interesting thing. And Slido is fun because the numbers keep changing, so it's hard to talk through. But we've got a lot of neutrals and agrees. I think what that indicates is that everyone's sort of heard about it, they know it's coming, but the actual detail of the differences can be a little bit tricky to work through, which is why we have Chantal here, because she will actually start to talk through that for you. So if we move through to the next slide, thank you so much for those responses. And on the next slide, I think we talk about what isn't changing. Back to you, Chantal.
Thanks, Eleanor. And it's really important to talk about what isn't changing first, because there are some fundamentals in STP that just aren't changing. And we always like to start just a reminder that, employers will still need to report payday information or employment information in their STP report, through STP-enabled software or STP-enabled payroll solution. So if we jump to the next slide, some of the fundamentals that are not changing is the way you lodge your STP report. And again, like as I mentioned, that's still through STP-enabled software. The types of payments that are in scope for STP remain the same, so they're not changing. The STP report is still due on or before payday, unless, of course, the employer is eligible for one of our reporting concessions. There's no change to the way the employer needs to lodge their STP report. End of year finalisation still remains the same. So really what we're going to talk about on the next slide in just a moment is the things that are changing. Is really there's no change to an employer's underlying tax and super obligation. It's just some of the things and the way things are reported in the STP report are changing. We're going to cover those now. So if you just jump to the next slide, this one's where we're really going to get into sort of the meatiness of what is actually changing. So if we just jump to the next slide now, I'll talk about disaggregation of gross in a little more detail on the next slide, but really what that means is currently the STP report includes a gross amount, which is a total of many different components and payment types. Because some of these are actually treated differently for Social Security purposes, employers are now going to need to report some more detail. So we call this disaggregation of gross. It really just means separately itemising the different components that make up gross in phase 1. And I'll talk about that in just a moment. One of the other changes employers will need to do is assign an income type for the payments they make. So this is the reporting of income types is really being introduced to help the ATO identify where the employee's income might be taxed differently. So if I give you an example on that one for, say, working holiday makers. If the employer is using a concessional reporting arrangement, such as for inbound assignees or perhaps closely held payees, or where there might be some other factors influencing the amounts the employer's reporting, such as foreign tax obligations and where there's like applicable tax treaties. Now, what I just want to really kind of draw out on this one is, for most cases and most employees, the income type is going to be salary and wages, and I'm sure everybody on the line today is familiar with that income type. So, you know, a vast majority of income type will just be salary and wage. It's only where there's those other kind of different circumstances that apply that a different income type would need to be applied to that payment. The other couple of things that are changing as well around the employee and who they are things like the STP report will now let us know information about the employees, where they're claiming tax-free threshold, have a Medicare levy exemption, or have notified their employer that they have a study and training support loan. So you'll recognise that information as TFN declaration kind of fields. The employer will need to provide us with information around whether or not the employee is full-time or part-time or casual. There are times where employers will need to report a country code. So that's, say, where payments are being made to Australian residents working overseas. The employer will need to provide information about the host country. But again, a vast majority of people, you know, our everyday sort of, you know, particularly around the small employer type of arrangements, it's going to be salary and wages, and a country code probably won't be needed. But it's an important change. And for those audience members today that do support businesses that make those sorts of payments, it is important to be across those changes. Again, if an employer, another change here is if an employer makes lump sum e-payments, they won't need to provide lump sum e-letters anymore, because that information will be reported through STP by financial year. There's some information that needs to be reported in the STP report around cessation, or when an employee ceases working for an employer. So this is around when employees leave, the date they leave, and the reason. So, for example, they may have left voluntarily or due to ill health, or perhaps that was an employer-initiated redundancy. So there's some codes and some reasons that will be available in the STP software that will indicate which one to use when an employee leaves. There's also another change, and it's around changing or transferring payer year-to-date amounts. So this is really just optional, and some DSPs or software providers will provide the functionality and others won't. But it's really just around where an employer is changing business structure, or perhaps they've changed software products. There's and can't zero out or finalize previous records because perhaps they don't use that product anymore and don't have access to it. So we've just made a couple of enhancements there to make it a little bit easier for employers when they are actually changing business structure or software. But again, it is optional, and not all STP enabled solutions will have that functionality. And then lastly, it's around child support garnishee and child support deduction information. So again, this is just optional. It's voluntary. So not all employers will have to do this, but they'll have the option to if their software product does introduce child support reporting. And it's really just that option to include the garnishee and deduction amounts in the STP report, and that will just reduce the need to have to give separate remittance advices to the child support registrar. But just really wanted to remind everyone that is voluntary, and not all software products will have that functionality. So I think we might have a couple of questions, do we, Eleanor?
We do, because before we move on to disaggregation of growth, there was a lot of information there, and like you highlighted, for the vast majority of your salary and wage earners, they may not see the impact. But for example, with cessation, why does an employer actually need to report such detail?
Yeah, sure. So I think really what that is around is going back to what I mentioned earlier around Australia streamline their interactions. So if I think about what that experience is now, Services Australia, let's say somebody needed to go and sign up for some kind of income support payment because they've lost their job. The reason that they've lost their job matters to Centrelink and to Services Australia. So often the employer will need to provide a separation certificate with all of those sorts of that bit of information on a piece of paper. And that can sometimes be onerous. We know, particularly up at the large end of town, they do loads and loads and loads of separation certificates, and it can often be, sometimes there's a bit of a strained relationship between the ex-employer and the employer. Employee and employer, I should say. And really having this information in the STP report, we send that over to Services Australia and Centrelink in real time. So there's no lag of having to get that kind of paperwork. And when we did some consultation around the different things that we could explore, including in the STP report, that one came really through from industry and from businesses that they find these forms particularly onerous. So being able to capture and report this information just from their payroll system straight through to their STP report and over to Services Australia looked like a real benefit. So that's why we introduced it.
That makes a lot of sense because you're consolidating what you were doing already, but into a different digital solution, which is great. You also mentioned earlier on around information that you might traditionally think of as being in a tax file number declaration. So what are some of the new requirements?
Yeah, that's a really good question, and one that we do actually get a lot on. So I just wanted to really clarify on this one that when an employee still needs to provide the TFN declaration to their employer. So there's no changes to what is on that form. The change is that information now will be captured in the employer's STP report. So employers no longer need to provide the ATO with that TFN declaration. So we get rid of that process, but it does not change the obligation for the employer to still get that TFN dec from their employee, because that's got all that really rich information on it around the TFN and whether they're claiming the tax-free threshold and all those different things that are on that TFN dec. They still need it. You still need to keep it on file, but you no longer need to give that to the ATO.
So much like separation certificates, it's one less piece of paper that you're sending through. So that's a really positive thing. And on the salary sacrifice, we talk about separately reporting in the slide. Can you touch on an example of what that might mean?
Yeah, of course. And this is a significant change, and one that I think is important for the audience to understand. So, of course, salary sacrifice contributions can no longer be used to reduce ordinary time earnings now or count towards an employer's minimum superannuation obligation. So if an employee has an effective salary sacrifice arrangement in place, the employer would have previously reported post-sacrifice amounts to us. And that's why we've introduced salary sacrifice reporting into STP Phase 2. So it changes now. The employer now needs to report the salary sacrifice amounts and separately report the pre-sacrificed income in the STP report. There's two new fields. One is called salary sacrifice type S, and that's for superannuation. So that's for super, that's for payments into complying funds or, salary sacrificing amounts into super. And then there's another field, and that's called salary sacrifice type O, or other employee benefits. And that's for stuff that's being salary sacrificed into other benefits other than super. So what I like to do is give a bit of an example. So let's say the employee earns, say, $50,000, just to make it easy, per year, and they sacrifice $3,000 into super. In Phase 1, or STP Phase 1, employers would have reported the post-sacrifice income to us of $47,000. But in STP Phase 2, they're now required to report the pre-sacrificed income as well as the amount of the salary sacrifice. So the Phase 2 report will look like gross of $50,000 and salary sacrifice of $3,000. So hopefully that makes sense, but that's essentially the changes to salary sacrifice, Eleanor.
Awesome. Well, let's get on to disaggregation of growth, which I think is on the next slide.
Perfect. So as I mentioned before, Phase 1, gross was just one figure with lots of different amounts and components inside it. Instead of reporting a single gross figure now, an employer is going to need to separately identify certain components. So I'll just walk through at a high level what they are, and I'll talk about allowances in just a moment. So there's allowances that need to be separately itemised, bonuses and commissions, directors' fees, overtime, paid leave, the salary sacrifice component, which I just mentioned. So I am hoping and I assume that most people are pretty confident and understand that terminology, because, people pay overtime, people know when people are taking paid leave. That's how employers, when they're running their payroll, know what to pay people. So, you know, those sort of separately itemizing those components shouldn't be too hard. With allowances, they were pretty complicated and a little bit unpredictable with how they were reported in phase one. So we've really tried to align the naming conventions and what they actually are for phase two. So, you know, in phase one, some were separately itemized and some weren't. So really all allowances now need to be separately itemized. What I will say around allowances is that we did actually do a really good webinar on that. And I'll talk a little bit about where to go and find that shortly. But allowances is probably something that I would suggest the audience today should probably get their heads around, because there is some changes there. So that's pretty much disaggregating gross at a very, very high level. But yeah, so, you know, all you really need to think about with disaggregating and gross is I used to put all of this into one bucket and send it as a gross figure. And now I need to separately itemize all the different types of payments that we're actually making to the employee. Thanks, Eleanor.
And so, thanks, Chantal. So we talked a little bit about allowances, and there's an excellent webinar from the ATO that people should check out. But are there any other things that employers and practitioners should keep in mind when working their way through this new way of doing things?
Yeah, look, I think probably my tip here would be, particularly when like helping clients prepare for STP2 and yourselves as employers. I'm sure there's plenty of audience members who are actually employing people at the moment and paying people. Is do I already have this in my payroll? Do I already separately itemize directors' fees if I pay them? Plenty of people won't pay directors' fees, but you know, things like overtime. Do I already have that as a separate pay item or a pay code? Do I already have, you know, things like bonuses and commissions as a separate pay item? If you already kind of have this stuff and you're already doing this on a pay slip, the changes shouldn't be too massive for you. Obviously, it's important to remember that all of the products will do this a little bit differently, and all your DSPs or your software providers will give you instructions on how to prepare your data. But there are some things that I think you can be doing now, which is going through what the different components of disaggregation of gross are and see, do I actually already have a pay code corpus? Because that will make things a little bit easier when you do your transition.
That's really good. And so it's a bit of a mapping exercise, because I think, you know, we'll talk about deferrals later on, and we know the digital service providers are doing a lot to get this up and running. But there is sort of that transition period where, you know, a lot of employers, practitioners will need to do that mapping exercise, and it's good to get a bit of a head start on that, I think. So moving along, we have another poll question. So we just talked about some of the things to think about when looking at disaggregating growth. On this one, it's about understanding how the STP Phase 2 changes will impact me or my clients. So we'll give a few seconds for that. And again, we don't have any disagree or strongly disagrees yet. Oh, we've got one now. We've got a couple. I shouldn't have said that. But there is, again, this tendency towards agree or neutral. There are so again, it's always hard when implementing change, because you do have that uncertainty. And once you actually get into the nitty-gritty and the service providers have provided the software updates, that's when you realise some of the challenges. So what we'll do is move through. I think agree has just come out on top. We'll talk about that transition approach. Because of implementing change, it's always a little bit risky. So back to you, Chantal.
Great, thanks, Eleanor. And look, you know, that's okay. I think it's fine for people to be a bit kind of like, all right, I'm not entirely sure exactly how it's impacting my clients. Because at the end of the day, obviously you'll be led, or your clients will be led by their software readiness. So on that basis, we've got a transition approach that we're really kind of saying is it's very flexible, it's reasonable, it's pragmatic. What I mean by that is, you know, there's going to be a big spectrum of readiness over the next few months of product. You'll have products that will become available in the next couple of months. We've got a couple of products that are ready now. But over this next, you know, certainly 3 to 6 kind of months, loads more are becoming available, and even, you know, towards the 9-month mark as well. Now, if you or your client is using a solution that is ready now or is ready in January or February, and you can start reporting by 1 March. We're really trying to encourage people to do that. And there's plenty of resources and available support to help employers report as early as possible. Now, of course, if the solution isn't ready, we've got a DSP or digital service provider, software provider deferral process in place. And I would assume that many people on the line today have started seeing the software communications around the fact that they have a deferral in place. What's really important there is the DSP deferral or software deferral really factors in enough time for clients to transition as well. So if I give you an example, let's say DSP A has a deferral until 30 June of 2022. What that really means is it's likely that that product will be available way earlier than that, and they've factored in time to get their clients ready and transition. Now, like I mentioned before, there's a spectrum of readiness next year. So it's really important that you, A, know the product's readiness, when they're going to be releasing their product, when it's your turn to start reporting, because of course they can't support everybody at once. On one date to transition. So they'll be really looking to bring their customers over sort of like, in segments and tranches. So it's really, really important that everybody sort of subscribes to their newsletters and channels and blogs and however they ordinarily would hear about updates and communications from their providers to understand whether they have a DSP deferral in place, when that's due and when it's my turn to come on. The other thing is there is a deferral process available for employers, and registered agents, of course, can also apply on behalf of their clients. What I really, really want to make a point of here, though, is a vast majority of employers do actually have a DSP deferral in place now. So most of the providers needed that little bit of extra time to get their products ready and to transition their clients. So there is no need for employers or agents to apply for deferrals where they are already covered by their provider's deferral. So that's a really important distinction I wanted to make there. And of course, the other thing I wanted to mention is that we understand this is a change process. So over this next 12 months, people are going to be getting ready and preparing their data, and they're going to be worried about making a mistake. So in that first 12 months of STP Phase 2, we wouldn't penalise people for making an honest and genuine mistake. So I just wanted to give that kind of assurance, as well as we do understand that this is a change process and this is something new. So of course, we wouldn't be looking to impose any penalties in those sorts of instances.
That's a really reasonable approach, and I will give credit to the ATO. I think that you have been consulting and testing responses and doing a lot of that background work to get the settings right. The important part was before you go and apply for a deferral with the ATO, just make sure you haven't got one with your DSP. But what are some circumstances where an employer or their registered agent may need to apply for more time?
Yeah, so that's a really good question, Eleanor. I think, again, just making that point that really understand if you're already covered by a DSP deferral or a software provider deferral. That's an important thing to know, because you might already be covered until 1 July or 30 September or whatever. There's a range of deferral dates for providers in place. So very first and foremost, I really want to encourage everyone to understand where your product provider is at, as well as your clients, of course. Then if, say, for instance, the product is available and you just need that extra couple of months to get your client base over the line, or if there's something happening within your practice or your business that prevents you from being able to meet your provider's deferral date, then you would need to come to the ATO. There is an online tool available, but it is in circumstances that, exceptional circumstances. So we really need to make sure employers and agents understand that we need everybody to sort of come on board and get across these changes so that we can support everybody to come on, and so that software providers can bring over there and support their clients as well. So we really don't want people to be leaving this to the last minute or the absolute end date of their DSP's deferral to be turning their mind to these changes. But certainly there are circumstances that we understand that are sometimes out of your control, where you would need to come and ask for some more time, so you can do that.
And it's always better to let the ATO know, I think, rather than avoid it and just hope for the best. So it's having those conversations because, like you said, Chantal, there is support available, and it might just be a way of being pointed in the right direction. Speaking of the right direction, if we move on to the next slide, we are going to talk about support and next steps. Before we do, we've got our third and final poll question, which is, I know where to find more information about the STP Phase 2 changes. The other two poll questions agreed sort of a level of neutral to agree. Oh, we'll go back to the slide. Thank you, Bella. And so again, this is coming out fairly clearly in the same sort of pattern. So we've got agrees ahead of the neutrals. One thing I will say is that the ATO does invest a lot in their ATO website guidance and does keep it up to date. So what I tend to do is either in Google or on the ATO website search, once you find the key landing pages, you can navigate and drill your way down through the information to what you need. So what we might do is go to the next slide where Chantal will talk through some of the support options.
Yeah, thanks, Eleanor. Look, I think whenever we get together in forums where we sort of only have this hour together, it's hard to go through all of the changes in detail. But what we've done is we've just recorded a series of webinars. If you didn't get a chance to look at that, you know, when you can, I think it'd be really good to go and have a look. This is where we explain the changes in detail, and we've got some industry and professional associations to come along and say, well, this is how it works in your practice, or this is how it actually works when you're running payroll, with some practical examples rather than just the theory. These webinar series, we cover everything for some, you know, we deep dive into salary sacrifice, we deep dive into allowances. I would really encourage you to go and have a look at the allowances webinar. We do a recap of the key changes, which I just did, but then we really go into things like employment conditions and the income types. And, you know, we talk about RESC and RFBA and that relationship and paid leave. And we sort of say, this is what you would include in paid leave and this is what you wouldn't include in paid leave. So if you get the opportunity, I would really, really encourage you to go and have a look at that series. You could probably fast forward the first 5 or 7 minutes of each of them, because what we do is everybody comes in at different times. So we do a little bit of a recap, and you hear me talk for a good 5 to 7 minutes at the beginning of each one around recap and why we're doing phase 2. So if you really wanted to fast forward me, I won't be offended to get stuck into the actual detail, but they are a really, really good series and they're a great starting point. The other thing I wanted to just mention as well is that there is a website that is, you know, on ato.gov, and a section and some pages that are dedicated to phase 2. So if you went and just did ato.gov.au and typed in STP, there is a landing page for phase 2, and that is where all of this information is. We talk about why we're doing it. Our detailed employer guidelines are there as well. So that those employer guidelines are really, really important. We've got tables in there so that we actually say, okay, here's the disaggregation of gross. Now, this is what paid leave is. This is just an example. And we have a table and say, these are all the different types of things that you would put into paid leave in your STP report, but you wouldn't put these things in paid leave. So we really designed that employer guide with some payroll professionals, and we consulted with some practitioners and some employers to go, how can we make this super user-friendly? So I think that employer guide becomes a little bit of your Bible over the next kind of 3 to 6 months while you're supporting your clients to transition and you're getting ready yourselves to transition, because it's quite user-friendly. You can go in there and go, okay, well, what is this type of allowance, and in what circumstance would I use this allowance? Okay, you know, so if you haven't already downloaded that or gone to have a really good look at it, I would suggest that's probably a really good place to start.
Excellent. And so then when we move to the next slide, it just has a bit of a map of the guidance and support that has been released. And as you can see, there's readiness messaging, newsroom articles, all sorts of things coming out. And the content, like Chantal said, the employer guide, I always download it and then I realise a little thing's been changed or another piece of useful information has been added. So sometimes just linking it and keeping on checking in can be quite useful as well. So with that, we might go to your key messages, Chantal.
Yeah, thanks,
On the next,
Eleanor. And you're right. There's loads of things that we'll be doing over this next few months. And, there's correspondence that will go out to sort of tell your clients and tell employers it's time to get ready. And we're trying to basically do that according to software readiness. So we realize there's probably no point in trying to tell somebody to get ready in February that's product's not going to be ready till November. So we're really just trying to be sensible in our approach there. We're doing loads of newsroom articles, all of that kind of stuff to really try and push people to go and have a look at that phase 2 page where all of those really great resources are. You know, we're really working with digital service providers on their rollout as well. So if you haven't already heard from your providers, I would really suggest that you go and have a look at their blogs and things, because we've been obviously keeping an eye out to make sure that you're getting the information from them that you need. So they'll start releasing information around their product readiness when they're getting ready to go live, and the steps that you need to do and the steps that you need to take, and some of that stuff you can do to prepare. So really, keep a close relationship with your provider. Like I mentioned, go and have a look at that employer guide. And you're right, maybe downloading it probably wasn't the right word, but it's there, and keep that link handy. And it's, we don't anticipate we'll be needing to do many changes to that. But if we find that, there's a cohort of people that are getting a bit confused with X, Y, or Z, we'll make sure we update that to put some more practical examples in as well. And then the other thing is just make sure that you're subscribing to all of our different channels as well. We've got newsrooms, we've got, different relevant newsletters and things like that. We've got our STP news events and resources tab. If you haven't had a look there, that's where you'll find all of those webinars that I talked about earlier. And if we need to do any extra fact sheets or anything like that, we'll have it all there in the one home so that it's easy to find. So look, I think my key message here, Eleanor, is just make sure you're keeping up to date with the ATO, and make sure you're keeping up to date with when your products are going to be ready to start your transition.
And that brings the presentation to a close. What we will do is commence our Q&A session. As I said at the start, and we have received quite a lot of questions through the Slido panel. While the last minute questions come through, Chantal, what are your recommendations to employers and practitioners on what they can do to prepare now? Like you said, the DSPs might not yet be ready, but what are some of the things that you wanted to reiterate?
Yeah, so I think probably understanding disaggregating gross is important. And, if you already aren't doing some things like having separate pay codes for bonuses and commissions, etc., maybe start looking at how you can prepare now. I think, I don't like to tell anyone how to do their jobs, but I think if I was a practitioner, I'd be looking at, okay, where are my clients at? Do I have some that are like super sophisticated and don't really need my help? Or do I have some that are like really going to need some hands-on help to get ready? And maybe just starting to look at my list. Okay, who's going to need help? Who do I think probably be okay on their own? When am I going to come in and help them? What products are they using? When is their DSP actually going to be ready? And just kind of doing some pre-planning work so that you're not kind of cramming. Let's just say you're a provider whose most clients use product A. You don't want to be having to support everybody at once. So it's what are your steps? What's your plan for next year on how you're going to prepare your clients and help them transition is probably what I'd be doing now, or, maybe not this side of Christmas, because I think everybody's probably over everything and wants to hurry up and go on holidays. But, when we get back and it's January, it's okay, what's the year ahead look like?
That's great. And so what we've done, and I forgot to mention, you've got a voting tool, so you can upvote questions to get them up on the list. So Chantal will talk about some of the questions that come through. For those that are either too specific or we run out of time, we will get back to you with answers after the webinar. But I'll just start at the top. Particularly in our market, we have a lot of practitioners who service smaller clients who only have associated employees. And the question goes around, do they have to report gross income details where payments are at irregular intervals?
Yeah, so I think we probably call these, Eleanor, closely held payees. So, just as a reminder to everyone, a closely held payee is someone who is directly related to the entity in which they receive the payments from. So often that's a family member of a family business. Now, we do understand there are some challenges and loads of different types of way these payees are paid, where an employer has less than 19 or fewer employees, I should say, there are some reporting concessions available for those types of payees. Now, it's reporting estimates on a quarterly basis or actuals on a quarterly basis. So it's really important to go and have a look at our guidance there. There's a tab on the left-hand side of stp.gov, which actually says, I think it's concessional reporting arrangements, and there's a closely held payee tab. It's important to understand those. Now, they were exempt for the last few years, closely held payees, but they did come in from 1 July. So that means from 1 July this year, closely held payees must be reported in STP. Now, it just depends on the type of arrangement and the type of concessional option your clients go for. But yes, they do need to come into STP, and yes, they do need to be disaggregated the same as everybody else in the STP Phase 2 report. If the employer is making use of one of those concessional arrangements, then the income type that should be against that payment should be CHP, or closely held payee, because that helps us understand that the payer is actually making use of that concessional arrangement and that this particular employee or payee is closely held.
Thanks, Chantal. We could probably have a whole webinar session on closely held. And it has been a change in just practice, and there's been an education component. So that's certainly something that is very useful to talk about. The next one is around changes to salary sacrifice reporting. Does that also apply to not-for-profit employees?
Yeah, it does. So wherever a payment is being made to a payee that, or somebody who is subject to STP and is in scope for STP, the salary sacrifice reporting is for them as well.
Excellent. So that one in all in, I think it is, because it is a reporting mechanism. It's not about, I don't think about this particular treatment or you get a different concession depending on your industry. It's about making those numbers available through STP. Yeah. The next one is around when you commence STP2, for example, in March 2022, are you expected to bring the full year numbers up to date, or will detailed inputs only apply from the commencement date?
That's actually a really, really good question, and something that I probably should have covered off, but you don't have to start at the beginning of our financial year. In fact, most people will be starting mid-financial year. So your provider will tell you what you need to do to prepare your data. Yes, you would bring in your year-to-dates, because of course STP is on a year-to-date basis, so you wouldn't start from zero. However, what we've found is that there are some employers and some agents that have let us know, look, we don't have bonuses and commissions because we didn't store it like that. Or there's a couple of those disaggregated components that it's just not how we captured things. We might have kept it on a spreadsheet, or, we're talking about a spectrum of payroll sophistication out there. So there are some concessional options for mid-year transition where it's okay just to leave something in gross if you didn't quite have that separately itemized component, because what we don't want to do, Eleanor, is go and get everyone to unpick their payroll for the last 6 or 9 months. That is not how STP works, and that is the last thing the ATO wants to do to anybody. So there are some concessional options there. What I will say, though, it's really, really important just to follow the provider's instructions, because some of those concessional options will be applicable for some products and not others, and they will tell you the right thing to do to prepare your data. But, back to the question, yeah, you essentially do bring in your year-to-date totals when you start in Phase 2.
And it's good to know that there is that concession available, and good to hear that you're not expecting people to go back and unpack a whole lot of things. Another upvoted question is, in reporting income types, do things like holiday pay and sick leave need to be separately reported?
So there are a big bunch of different types of paid leave. So, when you're talking about like holiday, annual leave, etc. Yep, that is a paid leave type. What I won't do today is go through every single one of them. But yes, if somebody is being um, paid a leave type, generally speaking, it needs to be reported in STP and separately itemized. There's a bunch of different type of leave, like workers' compensation and then there's this paid leave other. And paid leave other is where most of our general usual type of leave go into paid leave other, unless it's one of those other, I call them a funky type, there's jury leave and, some ancillary and defence leave and some workers' comp. But, generally speaking, most of that kind of stuff, the normal type of leave that we all take as employees will go into paid leave other.
Oh, that's really good. And another question, this is the dream, isn't it? Will STP2 be integrated with state revenue agencies for the reporting of payroll taxes?
If I had $1 for every time someone asked me about payroll tax, I would be a very, very rich woman. So of course, look, we've got to, we would always look at how we can use STP data to better all of the different sides of things that happen out there. We have to take this in stages and steps. At the moment, there's no immediate plan for any type of payroll tax sharing or anything like that, but we hear it all the time. We understand that people think that that's a really great idea. And of course, we will always keep it in mind.
And just from a policy perspective, certainly the professional associations, we're always trying to look at the state payroll tax system and look at ways that it can better align with what's being designed federally so that STP2 or STP can be used. I think there are a few mechanics that sit in the way at the moment, but yeah, that's the dream. Now, there's a timing question as well. My employer will have the first payday in January before 24th of December 2021. My question is whether the STP report for the pay of the 4th of January 2022 should be in the STP Phase 2. So let's say we've got your 1st of January start date. It relates, or they've done the work for it before the 1st of January start date. Does that need to be part of the STP Phase 2?
So this will be very, very software dependent. So it depends on, I know that there are loads of employers who will prepare their pre-Christmas pay runs in December. I would imagine that's probably likely just going to be in the Phase 1 format. It just depends. You will know when you've transitioned over into STP2 because there's different requirements. So I think that's probably something that you need to be thinking about is when have you actually either upgraded or, are you on a cloud kind of solution or have you had to download an update to your software? So I think that is really going to be dependent, Eleanor, on the product. In saying though, if the first pay run in January isn't in the STP Phase 2 report, that's fine as well, because don't forget, we've got that 1 March flexible date because we understand people are going to be on holidays, running payrolls early, all sorts of different weird and wonderful things that happen over in that December and January period. So really that one will just be going back to your DSP and saying, okay, when will I actually start reporting in Phase 2?
Thank you. And I think regardless of when that actual start date that the DSP delivers to you, that transitional or the bridging pay period is always perhaps going to be a little bit uncertain. But that's why you've also said you won't make or apply penalties for honest mistakes until the end of the year. So
absolutely. Yeah.
Excellent. Another question is around, we're talking about superannuation and STP Phase 2 earlier. So this is a question that asks, can superannuation contributions continue to be paid directly to the fund rather than through the ATO Small Business Super Clearinghouse?
So there are no changes whatsoever to any type of super stream, superannuation obligations or anything like that. So whatever the existing rules are around super contributions remain exactly the same.
Excellent. And there was a question just around why does the ATO want the gross income information reported separately? So why is there this additional field?
Yeah, look, it's a really, really good question because it does, I suppose, feel to some people like, oh gosh, more labels in an STP report, more information. Really, it comes down to different payments are actually assessed differently for Social Security. So I don't profess to know all the different rules around Social Security law, but certainly in our payroll design and when we're all working together on, well, what is sensible to include in the STP2 report? Why do we actually need it? And it comes down to the fact that certain things have different assessments for income payments. So, I won't go into which ones, but let's just say paid leave, for instance, it might be assessed differently to a bonus and commission. A bonus and commission might be attributed over a whole year rather than just to a certain period, because then it impacts people's fortnightly payments and things they get. So really we sat down at a table with the payroll industry and with Services Australia and of course here at the ATO, and we're like, okay, well, why do you need it? Okay, you need it because of this. Okay, well, we'll include it. So it really all comes down to there are different uses of the data for those separately itemized components of gross.
And I think the challenge sometimes as well is, even though the ATO administers STP and collects the information, this is actually stuff that's going through to Services Australia, which has a different regime, different concepts and different use of the data labels, I guess.
Yeah, and I think, if we think about why we're trying to do this, obviously it benefits all of us as a community if people who are reliant on Social Security get the right payments at the right time, for lots of reasons. So, whilst I understand it's a change, most of that information probably I would say would already be in somebody's payroll solution, things like overtime and paid leave. In most circumstances, I would think an employer has that kind of information at their fingertips anyway. And whilst there's a little bit of a change in a setup process, there are really big benefits to our community for making sure that this information goes through to Services Australia so they can make sure people get the right payments.
And speaking of information going through, another popular question is the ATO going to pre-fill BAS with the wages labels from STP data?
Yeah, we were always going to do that, and certainly I'm moving ahead with that. I think we did some piloting, and we're going to do some more piloting. So that is a watch this space. Obviously, that's a really big and complicated thing that we need to make sure we get right, but it is definitely still around, and it's always been an intention that we will do that. But of course, we need to work with some pilot participants and things and make sure that it's doing the things we want it to do.
That's really good news. So watch the space and see what comes out, maybe this next year or the year after. We have a couple more. We've got a few more minutes. Circling right back to the whole closely held, there is a question here about, are directors' fees excluded from STP reports? I know you sort of said it really depends on the arrangements, but did you have anything else to comment on that question?
Yeah, so director fees are actually included in the STP report. There is a disaggregated item called director's fees. So, when you think about those sorts of payments, often there's a particular type of fee in like a constitution of a company or something like that that says director's fee. That is actually separately itemized as a payment type. But there's some really good guidance on director's fees in the employer guide. So I'd suggest everybody goes and has a little bit of a look at that.
Excellent. Thanks, Chantal. And we've got a list. Where can we find a list of software providers who have a deferral?
Yeah, so there's no list, unfortunately, that says, DSP A has a deferral until this date. There is a list, though. If you have a look, and actually maybe, Eleanor, we could send you the link after the session. And when a product is ready and is able to connect to the ATO and it's conformant and it does all the things we need it to do, we call it whitelisting. But really what that means is the product can start reporting in phase 2. There is a list of STP products, and now there's an extra column, or I think that there's an extra line that says whether it's ready for STP phase 2. They will keep getting updated as products become ready and available to market. So whilst there's not an actual list of all the different deferral dates, again, you'll just need to go back to those providers that you have a relationship with or that your employers your clients use to get those dates.
And while we're talking about software providers, there is a question around, are there any cost-free software solutions available or low-cost solutions? Do you know?
Yeah, so we still have that I think it's called the low and no cost provider register. So again, I can send you the link after this session. And some of those are either free or they come at a cost of $10 or less per month. And, you know, some of those will definitely be being updated. And I think, yeah, that they're really for micro employers. So generally they're free where you have 4 or fewer employees, but there's a really big spectrum of price scale. And as I mentioned, there's some that are free, some $10 if you've only got 4 or less, then it goes up a little bit per employee over 4. But certainly that list is still there.
Fantastic. Now, we still have more questions, but we have run out of time. What we will do is take all of the ones that we haven't been able to answer today and get some information and responses back to you, which we will send out with the webinar recording. So thank you so much. That just about wraps up our presentation for today. Staying connected and informed, I think as we move through the slides, we've just got a couple more. From CPA Australia's perspective, we do have CPA Australia Tax News, and Chantal mentioned all of those subscription services. What we do is collect all of those and put them into a newsletter. So either way, you won't be able to miss the updates. I'm in the policy and advocacy team. If you have any experiences or issues that you want to raise or share, certainly get in touch with me at that email address. And we also have our Member Connect platform where people will post their questions and gain responses from the member community. They're not technical responses. It's a little bit like Reddit for members, but it is a really good source of sharing those insights. On the next page, we have also included the hyperlinks to the ATO's core documents. So these are the ones that Chantal, I think, if I wasn't counting, that has mentioned multiple times during this presentation. And this is really the place to go. Any specific questions, there's probably a webinar or a chapter of the guide that's there. So definitely have a look at that. So stay up to date. And I think really importantly, that transitional approach is really quite flexible. And you can access all of this detailed information that's kept up to date. So as always, it's a pleasure to have the ATO join our webinars and to help our members keep up with the changes. I'd also like to acknowledge the ATO for listening to the profession and providing extra time, deferrals and discretion on penalties as part of the implementation. This includes shifting the start date from the initially proposed 1st of July this year to the 1st of January 2022. And that was it let everybody take a bit of a breath in the middle of COVID lockdowns across the nation. It has been a couple of tough years for the profession, and we'll hope that you're able to take a break to celebrate another incredible 12 months on the front line and to get some much needed rest. Many thanks, Chantal, for talking with us today, and I will now hand back to Annabella.
Thank you, Eleanor and Chantal, and thank you to everyone for your participation. In the next 3 working days, you will receive an evaluation survey with the recording link of this webinar and a PDF copy of the presentation slides. We really appreciate your feedback. It is extremely valuable to CPA Australia to help us to deliver better events for you. Thanks again, and we look forward to welcoming you to another CPA Australia webinar soon.